Welcome back to Finance Friday. It's another special edition of Money Girl where I answer your burning money questions. Today's topic comes from Jimmy, who says, I'm buying my first home and researching mortgages. I see options that include points. Can you explain how to know if buying points will save me money in the long run? Thanks for your question, Jimmy. I recently bought a new home and also had to determine if buying points would benefit me. So don't miss this episode if you're in the market to buy a new home, or maybe you just want to understand the pros and cons of mortgage points for a future transaction. This podcast will review 5 things you should know about points so you can choose the best home loan for your situation. Thanks for downloading episode 901 of the Money Girl podcast. I'm Laura Adams, an award-winning author, money speaker, on-camera spokesperson, and founder of The Money Stack, my free Substack newsletter. You can learn more and connect with me at lauradadams.com. That's also where you can email your money question and sign up for The Money Stack. It gives subscribers a terrific money success toolkit that I highly recommend. You can also record a brief question or comment on our voicemail line by calling 302-364-0308. All right, let's talk about 5 things you should know about mortgage points. So getting a mortgage is a massive financial decision. And, kind of going through it again recently reminded me of all the expenses that come up. And buying points can help you get the best deal, but they're not for everyone. So let's go through 5 things you should know so that you can evaluate if the expense of points will eventually pay off. All right, the first thing you should know is how mortgage points work. Mortgage points, also called discount points, are an upfront fee that you pay to a lender to reduce the interest rate on a home loan. Buying points means you are prepaying interest in exchange for a lower interest rate. And it's also known as buying down your rate. Every mortgage point you buy reduces a loan's annual percentage rate, or APR, by 0.25%, so 0.25%. So if the original APR is 6.5%, paying 1 mortgage point knocks it down to 6.25%. Paying 2 points reduces the rate to 6%, and so on. So the more points you buy, the lower your interest rate will be. For example, let's say you're shopping for a $300,000 30-year fixed-rate mortgage at 6.5%. Your total interest paid over the life of that loan would be approximately $382,000. But if you bought 3 points, getting a 5.75% rate instead of the 6.5% rate, you would pay about $330,000 in total interest over the 30 years of the loan. That's a massive interest savings of $52,000 over, the whole life of the loan. So that is how mortgage points work. Now, the second thing you should know about points is what they cost. 1 mortgage point costs 1% of your home loan amount. So if you want to borrow $300,000 to buy a home, 1 mortgage point costs $3,000. You'd have to pay $6,000 for 2 points and $9,000 for 3 points, and so on. Now, most homeowners who opt for points buy between 1 and 3, and you can also purchase fractions of points. But lenders typically do cap the number of points you can buy to 4, giving you a 1% maximum rate discount. So the challenge for buyers is that lenders usually require you to pay points up front. You've got to have enough savings on top of your down payment and all the additional closing costs to pay those points in cash at your home closing. All right, the third thing you should know is all of the benefits of buying mortgage points. So as I mentioned, paying a few $1,000s up front for 1 or more mortgage points could save you tens of thousands of dollars in interest over the long run. A lower interest rate on a fixed rate mortgage means you pay a smaller monthly payment. Therefore, buying points can help you keep the monthly cost of a new home within your budget. And of course, you're going to save money over the long term. For example, if you get a $300,000 30-year fixed rate mortgage at 6.5%, your monthly principal and interest payment would be about $1,900. But if you bought 3 points, discounting the rate to 5.75%, your monthly payment would be about $1,750. That's going to save you about $150 a month or $1,800 a year. In addition to paying less interest and lower monthly payments, mortgage points usually qualify as tax-deductible mortgage interest. So if you itemize deductions on Schedule A, that's a tax form, you can include a certain amount of mortgage interest, including any prepaid points, to reduce your tax liability. And, that's going to happen just in the year that you purchase your home. The IRS specifies that separate lender fees are not the same as mortgage interest or points. So it doesn't qualify as a tax deduction if you buy mortgage points simply to reduce your origination fee instead of actually cutting your interest rate. And if you're unsure if your mortgage points are deductible, be sure to consult with a qualified tax accountant. All right, the fourth thing you should know are the downsides of buying mortgage points. Mortgage points have many benefits, but there are also some downsides to consider. As I mentioned, you must have enough savings to purchase points up front. Our current housing market is already challenging enough for buyers due to high home prices and mortgage interest rates. So in addition to needing cash for a substantial down payment and closing costs, points could stretch the average homebuyer's budget pretty thin. Buying points is not wise if you don't have enough to pay them and maintain a healthy cash reserve. Don't forget that a mortgage payment has 4 components known as PITI, P-I-T-I, which stand for principal, interest, taxes, and insurance. Be sure you factor in typical homeowners insurance rates, property taxes, and any homeowners association dues to get an accurate picture of your potential total monthly housing obligation. Another con for points is that if you don't own a home long enough, you won't break even on the cost. Let's go back to my previous example where you get a $300,000 30-year fixed-rate mortgage. If you pay $3,000 for 1 point to discount the rate from 6.5% down to 6.25%, your payment would decrease from $1,900 to $1,850, which is a $50 monthly savings. To determine when you break even on points, divide the cost of your points by your monthly savings. So that would be $3,000 divided by $50, which is 60 months or 5 years. As I mentioned, you might also have some tax savings to include for your first year of ownership, depending on your situation. So you'd need to make payments for at least 5 years to save enough interest to recoup what you paid for points. If you sold the property before owning it for 5 years, you'd lose money on points. In other words, if you're not sure how long you'll stay in your home or think there's a chance that you may need to sell it before the break-even point, buying points won't save you money in the long run. Another potential con for mortgage points is buying them before interest rates decrease. If rates substantially decline, you could refinance your mortgage for a lower rate without having to buy points. While no one can predict the future of interest rates, consider what's happening in the economy and maybe ask some professionals like a real estate agent, mortgage broker, or a financial advisor for guidance. Also remember that every financial move comes with an opportunity cost for doing something else with your money. Let's say that paying $9,000 on points saves you $52,000 on mortgage interest over the life of a 30-year mortgage. Well, what if you invested the $9,000 instead and let it grow for 30 years with an average 8% return? Well, that would allow you to earn about $100,000, nearly double the mortgage interest savings. Now, only you know if you would invest that money, so you have to really take a look at, what you're realistically going to do with those funds. All right, the fifth thing to know is how to decide if you should buy mortgage points. While paying mortgage points can save money over the life of a loan, it isn't for every homebuyer. To sum up, paying points may not make sense if you don't have enough savings to buy points and maintain a healthy cash cushion. You won't or don't know if you'll remain in a home past the break-even point to recoup the cost of points. You think interest rates will drop, allowing you to refinance a mortgage in the future. Or you believe you can earn more by investing your money than you could using it to buy points. When you shop for a mortgage, you want to compare rates with multiple lenders. Ask them for quotes with and without points so you can make an easy apples-to-apples comparison and carefully crunch the numbers. If you plan on staying in your home for the foreseeable future, you can easily afford points, and you don't believe interest rates will drop significantly, buying points can save you money. Jimmy, I hope this has been helpful for you and anyone listening who is also researching mortgages right now. My best advice, having gone through this myself, is just to talk to as many people as you can. Get guidance from your real estate agent, maybe a couple different mortgage professionals or mortgage brokers that you're getting quotes from. Get their take on where they think the market is going and what will be best for you, considering your financial situation, the property that you're looking at buying, and, your plans for how long you want to stay there. Before we go, a quick reminder to subscribe to The Money Stack. That's my Substack newsletter. You can sign up when you visit lauradadams.com. It's filled with money tips, tools, news, challenges, and things I enjoy. You can subscribe for free or become a paid member and support this show and get access to live educational events. That's all for now. I'll talk to you soon. Until then, here's to living a richer life. Money Girl is a quick and dirty tips podcast, and we have a terrific team that I want to thank. Steve Rickyberg audio engineers the show. Brandon Gachus is our director of podcast. Holly Hutchins is our digital operations specialist. Morgan Christensen is our advertising operations specialist. Davina Tomlin is our marketing and publicity associate. And Nathaniel Hoops is our marketing contractor.